Yes, and we are live. What's going on, everybody? Welcome back to another stream. We got Thomas on the mic with me, and we're talking all things macro. We're going to talk a little bit about AI. Actually, we're going to zoom in on that sector of the market. Obviously, the AI world is a big chunk of like the S&P. It's a big chunk of people's, honestly, just like their mental real estate as their investors. They're trying to get ahead on stuff. They're looking at which industries, which sectors are going to be exciting to invest in. And AI is pretty much top of mind for all of it. So it's kind of like one of the main focuses here. Thomas had a really interesting article. I'll pop it open here just for a second, just so you guys can see. Maybe it went kind of viral, I guess you could say, 50 million hits. And so maybe you actually already read this. And so we're going to allude to that and a couple of other interesting areas in the market. Bitcoin in like the mid 60s, dude. Like on the Bitcoin side, it's pain. So anyways, Thomas, it's good to have you, man, as always. We'd love to get some of your thoughts on where you're sitting in the macro world, if you're paying attention to Bitcoin or if it's AI. How's it going?
Yeah, man. No, I'm doing good. It's a super interesting time. Bitcoin keeps getting absolutely smoked. Very, very interesting to kind of figure out what's happening here. And I think that's why also I wanted to bring we talked about before the pod started, bring your attention to that article talking about this AI revolution that's happening here, because I think one of the reasons why I liked that article was simply the framing of it from the perspective that this is like a COVID moment in some sense. And I think the reason why it has that pre-COVID Feb 2020 feeling attached to it is that there's massive uncertainty that people are just feeling right now, because nobody knows like what the world is going to look like in a year's time or 2 years time, or we're just in this moment in time, and where it feels like the ground underneath us is shifting, right? So you sort of, we're witnessing it in pockets of the economy, but not like, I think what's eerie is that in some ways it's like the stock market is still at all-time highs when you look at the broad market indexes, and yet at the same time Bitcoin has been absolutely smoked. You're watching the software stocks are absolutely obliterated, even more than Bitcoin, and really these great companies that historically have just dominated for this epoch in time. And I'm talking about essentially last 15 years. From 2010 onwards, you've had the software story. All of these companies have come out of the mobile revolution and the internet revolution that's come along, and you've got all of these different micro indices within the software world, whether it's CRMs or learning platforms or software sales, like integrations into restaurants. You know, this whole narrative, software eating the world, has been the macro narrative for 25 years, certainly 20 years. And it's been, we've witnessed this for the returns have been massive, but it's all cratering. It's all cratering over the last year, where these big names like a HubSpot is down 75% in 1 year. You're talking about hundreds of billions of dollars wiped across, like market cap wiped out. And it's a fascinating time, because people are going, we just don't know what the future holds. Like, you can't, you know, when you think about the value of these companies, you're trying to do a discounted cash flow, like, oh, they're going to make this amount of money for 20 years, 30 years. You're trying to actually, so what's fascinating is all these businesses are at sort of record profits. Like that's I think the big unusual or disconcerting thing right now. And that's also why you see the broader market hasn't collapsed, because the economy on the surface looks like it's doing great. Actually, like unemployment is doing fine in the US and broadly. In fact, it's had a positive outcome. It's actually lower than people expected in some of the latest data. And markets, like these companies, are making record revenues, record profits, but people are going, yeah, but I don't know what the world is going to look like in 2 years' time. And I think it's like not not unreasonable because these models are so good. And I would just say for the people like watching on this stream that, and this is one of the points in the article, I think that what's happening is some people are being caught out with these AI models because when you use the free version of the model, which is what most people do,
Of course.
you go on Gemini, you go on ChatGPT and you use the free version. And it's like, it's really good, but what you're getting is the AI model that they made a year ago, 18 months ago. Like that's what they give out for free. It's when you're using the paid version that you're getting the top tier stuff. And that's the thing where it's like, you can literally say to it, you know, build me a competitor for this company. Like I want an app that does this. And you just bang, bang, bang. And then it will like literally spit out all of the code you need for, and give you instructions. But here's the back end code. Here's the front end configuration. Here's the XML files. Here's the JSON files. Here's every step to upload. Like it just like does everything for you. And it's so mind blowing. It's so insane. And once you see that, you go, well, you go, why would, I guess the point is, you go, first of all, it's like, is this already there for disruption? But even if it isn't, you go, how can anybody be reasonably expected to be paying a ton of money for software in a few years' time? Because if I've got some expensive software product, I'm just going to tell the AI to build it for me. Or, you know, you're going to get Google to build it for you at 1% of the price. And in any case, you're just in this situation where basically like there's just massive amount of uncertainty, and you can't really put a, like, how can you value a business that's yeah, it's got this great stream of cash flows, but like, yeah, you might be dead in a few years. And we talked about this last week, right? Blockbuster's record profits was in its final year, and then it was dead, it was gone. And so, and other people have brought this up when it relates to Bitcoin, where Bitcoin has this correlation to the software stocks. And this is a long running correlation dating back like 5 years time. It's a crazy chart basically showing every up and down over the last 5 years in the Bitcoin price has exactly mirrored what's happened in the software industry. And so that's interesting on a couple of layers because, well, one, the tech, this sort of wreck over the last 6 months, or even last few months really, in Bitcoin can in some sense be explained by what we're seeing in these software stocks. But also it tells you that the narrative that some Bitcoiners necessarily want to believe in about it being this kind of hard money, you know, whether or not it's true or not, the market isn't buying it. So like, you know, you can have your opinion and you might be right, but the market is what determines the price. And the market is saying it is essentially a leveraged play on the software stock industry. At least like that's the way the price has been moving for, you know, we're talking about 5 years, which by the way is a third of the life of Bitcoin. And so
you're gonna make some enemies today, Thomas. You're right. He's on a tirade tonight. The Bitcoiners not going to be happy with this take.
Well, no, I mean it's not like this isn't. It's not an opinion. It's just that this is what this is the way it's being priced by the market.
Agreed.
You know,
agreed.
I like, for me, when I think about Bitcoin from first principles, I don't understand, frankly, why it is being treated that way, because I don't, you know, the way like some CRM is so much more vulnerable to being disrupted. You know, I can pretty easily see how you copy paste that code. An AI can generate a CRM for you, or a Slack replacement, or, you know, a Duolingo learning app that can teach me how to learn a new language. But you can't copy and paste the Bitcoin code. So I don't think logically it makes sense why the market does this. But nonetheless, like, if you're looking for, you know, if we want to talk about, well, why is Bitcoin why is Bitcoin down so much over the last 6 months? It's kind of staring us in the face that it's got this long run massive correlation with these software stocks, and the software is being pounded. Of course, I think it's fair to say that other people can bring up, hey, Bitcoin, like correlations are fleeting and they come and go. I'm sure, like, hey, you'd be aware, it was like super popular this time last year, these correlations with M2 money supply and Bitcoin price. Those were awesome charts, and the correlation was insane, and it broke down. So M2 money supply just kept rocketing up, and Bitcoin did not. And so, that's part of the game as an investor, is going like, I see that correlation, but I don't buy it. Yeah. And, I'm going to bet that the correlation breaks. But, that's the kind of bet you have to make. And it starts to get like, what kind of time period are you going to bet that the correlation breaks? Because if you see a correlation that's lasted 5 years, it's pretty ballsy to be like, well, that's lasted 5 years, but I think that's going to end tomorrow.
Yeah.
Like, and I think that what's interesting is you could argue there's a kind of a Lindy effect when it comes to correlations. And if like, what I mean by that is the guy that came up with the Lindy effect was an observation about, it was actually about like how long musicals will last in the theaters. So basically it was like trying to bet, if you have this musical that's been around and you're trying to guess how long will it keep being shown on in theaters, it's kind of interesting. And the model he came up with was like, if it's been running for 1 year, you can probably bet it will last another year. If you've had a musical that's been running for 50, like chances are, say, Cats the musical, which has been running since, I don't know,
that's a long one,
or earlier or whatever it is. But my point is, like, if you're looking at, say, Cats the musical, I think it's fair to say people will still be going to see Cats the musical in 10, 20 years time, because they were just watching it 20 years ago. And this was that idea, like basically the length of time that it's been around gives you roughly an indication. It's like it's just a rule of thumb. It's not perfect, but it's like, if this musical has lasted 30 years, maybe I'm willing to bet it's going to last another 30 years. It's just, and you could extend it to everything, right? It's like, hey, Christianity, like belief in, well, first of all, you could be like a Christian and be like, well, that's Jesus is God, it's divine word. But you could also, even if you're not a religious person and you wanted to bet how long will Christianity be popular amongst human beings, you say, well, if it's lasted thousands of years, pretty sure it's going to last thousands of years more. Like you would make that bet, even if you didn't believe it yourself, you would still say this is not something that's going to fade away. Whereas, and so this is an argument as well for, in some sense, for the life of Bitcoin, because the longer a Bitcoin lasts, now when I'm 16 years into this, and so the more it starts to go, the stupider people look when they go, oh, it's going to zero. Like it's clickbait, click farming stuff. I know Financial Times did that in the last week or so. They put out an article talking about how, the real price should be zero, but like, I don't even think they believe it themselves, right? They just do this because they know they remember from 3 years ago. It's like, wait, remember when we put that article out and we got people excited? It's just a game. But the point is that people don't believe it as much. But you do have, like, basically the longer this thing goes, the more longer you can expect it to go. And then I guess I bring that up in the case for, hey, how long is Bitcoin going to be this kind of software stock leverage play on software stocks? And I go, from pure fundamentals, I do think it should break down. But also, if it's lasted 5 years, it lasts many more years to come, right? Like, I'm not going to bet that it's going to change tomorrow. And so it's just something for Bitcoiners to be aware of, because, like, if you're extremely bearish on software and you're bullish on Bitcoin, you kind of got a cognitive dissonance there that you need to challenge yourself with, or at least explain why that correlation is just going to change completely. And by the way, it's not necessarily a bearish take on Bitcoin completely, because markets have mean reversion, right? Like mean reversion is the thing, and these software stocks have been absolutely slaughtered. And yes, you'd be catching a falling knife, but at the same time, they're starting to look extremely cheap, a lot of them, because they've come down by 80%. And so, maybe there is, maybe even the correlation lasts and Bitcoin can go back up, but it's, you're probably having to make a call on the software stock, which means inherently, going sort of full circle, you have to make a call on the AI, because what you're really betting on is, do I believe fundamentally that these companies are going to be replaced because, people are going to be able to replicate their software, the AI is just going to be able to generate it, and people aren't going to be willing to pay massive premium, massive margins for the software that people have. It's an extremely challenging thing, and this gets to the heart of investing, because you either have to have a view on this, or you can simply own an index, because if you own an index, at least you're going to get winners and losers. And if you own the broad market index, there's going to be companies that, well, first of all, different sectors do well at different points in times. But we were just talking about how, I guess the other thing as well is, if you're trying to figure out, like, hey, if you do believe in the AI story, then you go, I want to be invested in the company that has like the best model, the winner of this. And it's extremely difficult to know who that's going to be, because, I mean, if you think about, say, Microsoft, right? This time a year ago, they were looking like the clear winner of AI, because they had this connection with OpenAI. Like Microsoft, OpenAI is crushing it with their models. Microsoft owned, if they got 50% equity in this, they're just going to crush it. And now, like, their stock is down 25% over the last 6 months. It's OpenAI might actually be like, it's really unclear whether it's just going to get crushed by Claude and Gemini and all these different things, or maybe the next model is going to be amazing and it's going to take back the lead. Like, this thing flips so quickly. But I bring this up because we were talking about how would you play it if you want to make sure you get the winner. Mm-hmm. And then I guess, like, the simple answer is somebody from big tech is going to win, and maybe there'll be multiple winners, but that, like, it's going to be one of Google with Gemini, Amazon, especially with its connection with Anthropic, which it owns a stake in Anthropic, or Microsoft with OpenAI. And then obviously NVIDIA, which is just creating the chips, and it's just crushed it completely over the years. So I was saying, I actually kind of like basic play, just own the FANG ETF. I think it was FNGS.
Yeah, let me bring it up. It was an interesting one for sure. I'll pull it up here.
Yeah, it's you're getting big tech. Like, it's not, it's not a super hot take to say, maybe you just want to own big tech in this environment, because there is going to be, like, if you own this ETF, you're going to get the winner out of this. You can just about guarantee it. It's just a question of, you just don't know who it's going to be. And that's right. That's extremely hard to pick. But, chances are it's going to be one of Google, Amazon, Meta. It's going to be, and Apple isn't going to stay out of the game forever. They're going to figure out a way to use AI and integrate it within their phones to massively benefit, like massively upscale the value of what they're offering. So I actually think like this is the play if you just want to have AI exposure but you don't know how to do it. And there's other stuff too, which we can talk about with the power guys, because I do think they're extremely interesting as well. But I like this big tech play essentially. But tell me what you're thinking.
Well, so real quick, just for people who are aware, especially if you want to find out more about FNGS, they are a Rex Shares ETF. But it's a great point there, and it goes very along this conversation. Real quick, just to take care of any formalities here for people who are interested, that link is down below the tweet. It's the tweet below the stream, and if you're watching on YouTube, it's in the description. It is from Rex Shares. Big shout out to Rex Shares for sponsoring the show, obviously. Let me just read this out to make sure we're good. But investors should carefully consider a fund's investment objective, risks, and charges and expenses before investing. A fund's prospectus and summary prospectus contains this and other info about Rex Shares. And if you want to obtain a fund's prospectus and summary prospectus, like I said, visit their website at rexshares.com. The fund's prospectus and summary prospectus should be read super carefully before investing. Like I said, big shout out to Rex Shares, one of our longest running clients. But it does go very long, this conversation we're having around AI and where the industry is headed. And, especially with, I think it was you and I who were talking about this a second ago it's leaving me right now. But when you had brought it up, I immediately thought of the prediction markets. Oh, it was when you had brought up the, if this, opera play, whatever, lasts 1 year, likely we're going to see it move on to the next year. And my brain was automatically, because I'm so degenerate now in all these trading spaces, it was like, oh my God, there's prediction market opportunity here for if this is going to make it to the next year. And if it does, will it make it to the next year? But no, it's not a bad idea, for people who are looking to make plays. You don't have to choose like the one specific asset you think that might win here. That's the whole point of the ETFs, is you can get in here, you can find their holdings and say, okay, yeah, like, these make sense. I think these have a huge opportunity. Plus, like these big winners here, like they're able to throw just enormous amounts of cash, enormous amounts of opportunity at any industry they want. I mean, dude, Facebook went and did the side quest of a century and went into metaverse land for a few years, changed their entire brand to Meta. Maybe there's more behind that than just metaverse, but they're able to do these things. And so that's a huge benefit of like the ETF world, honestly. And there's all sorts of ETFs out there. There's the ones that are managed, pretty regularly, and they're changing and they're updating them every quarter kind of thing. There's some that don't really move too much. You kind of know what you're getting. They're a lot bigger. But I think it's a really interesting one. And it gets me thinking, that let me see if I can find that article you sent me that I thought was really interesting. Unless there's something else you wanted to share on this. I thought this was like a really good segue actually to this article you'd brought up and sent me. And there may have been other people who caught this one. 55 million hits, dude. Like this struck a chord with people.
Yeah.
So just give like the brief intro on this actually.
For sure, right. So, what we're talking about here is, the article title says it all, which is something big is happening. And it's about this idea that we're now in, it's a moment comparable to COVID. This is the moment comparable to a big change in the world. Like the world is changing ahead of us and it's massive uncertainty. And Matt, the author of this article, breaks it down across a number of different spectrums, like from an individual personal perspective, like what can you do in this? Because we're all like, companies are vulnerable to disruption, individuals are vulnerable to disruption in the sense of it's going to take people's jobs. There's no question about it. It's going to change the way we interact with each other. It creates massive financial uncertainty because you just don't basically he's saying just, bunker down ahead, prepare yourself financially, make sure you don't get into debt assuming your job is going to be there in the next year, because it might not be. And of course individuals have to understand whether their own jobs are vulnerable to AI or not, right? If you're a plumber, you're probably pretty safe. Yeah. But if you we've seen the latest video productions that have come on the X timeline recently. I don't know if you've seen this stuff, but if you're a video maker, it's extremely dangerous time for you right now. Actors, I think we might actually be in a period of time where Brad Pitt is going to be the leading star of movies for the next 1,000 years.
I know a lot of people who are going to be happy with that.
Yeah, but it's like if you got in it's kind of like how I think there's actually an interesting corollary to this, which is if you became famous pre-internet, you were insanely famous post-internet. likewise, if you were sort of had distribution pre-AI, then your distribution, if you got a brand pre-AI, then, you know, because there's like, AI is just going to make production of content. It's going to up it 1,000-fold. And it's looking like it's going to be pretty good too. But it's like, the question is, what's the brand? It's going to be really hard to, because there's going to be such a noise of content. It's like, how do you actually get, how do you cut through that? And you know, how do you get people to remember you? And it's going to be really hard to create brands. But if you already have an existing one, then you might actually have a chance. Which is also why, and it doesn't actually mention this in the article, but plays like, you know, it creates an opportunity for these existing, like Disney, say, which has all these different worlds, infinite variations on it, or like the Game of Thrones world, right? If you own the IP, suddenly you can have infinity variations of stuff inside that world. And we're already seeing that to some extent with the way they create like 1 million different Star Wars movies or whatever. But imagine if you didn't have to spend $100 million per movie. You could just tell that with a few prompts, okay, create me a new Star Wars movie. And it's like inside the world, and, you know, you're just going to have the ability, like the stuff it's going to be so mind blowing, the potential, and it's just going to change the way we operate. And I really like this article because I think it gets to a point that like touches on the psychology of how some people are feeling, where it's like there's massive uncertainty, and it's a bit of a weird dynamic where you're walking down the street and some people are aware of it, and some people are like sort of blissfully like, oh, I don't care about AI, or AI is kind of junk. And it talks about this in the article, about how there's so many people that tried AI 2 years ago and they're like, oh yeah, but it creates errors, you know, it's not actually that good. And then you know, and it talks about how, like, you know, it went from when ChatGPT 3 came out and we had this moment in 2022, 2023, it was like, oh yeah, can you solve this math problem? And then it's like, well, yeah, you can, but you're a high school student. It's like, oh, actually, you can do PhD level maths. It's like, oh, actually, you can do proofs. Oh, actually, you can do new stuff that we've never even thought of. It's like at that level. And also, I think the fact that it combines with the time where we're seeing, like, you know, we are seeing these AI researchers at different companies being like, actually, like, I think we're creating God here. I'm going to peace out. I'm going to go off and write poetry in the countryside because, you know, we might be unleashing the devil here or whatever. I just think it's a massive uncertainty period of time. And this is also why people are like flocking to gold, dumping Bitcoin, because it's like basically like risk off, risk. You know, I want the safest thing in the world. I don't know what this is going to mean for my assets, but I do know what's happened in the past if you have a big chaotic change. Now the question is, are we going to have a catalyst? So what happened about a week ago was a new model came out, and on that day, the new model came out, a big release, like 5.3 or 5.4 or whatever the number is for ChatGPT and Claude at the same time. 2 new models came out, and on that day, Bitcoin went down 15%. You had software stocks get nuked. And so there's this feeling that there's like a coming trend here, but also there might not be a catalyst, and there might be a turnaround, because the next model actually might disappoint. Like it might be like, oh, the next model comes out and it's kind of the same as the last one. I mean, I'm not predicting that. I don't think that's going to happen, but that's why it's so up in the air. But I do think it's so crazy, Kate, how we're in this world where it's like, oh, AI is really good, stocks are going to tank. Oh, AI is really bad, stocks are going to tank. Like you know, because a year ago we were in this situation where you at like DeepSeek, the Chinese model came
Oh
out.
my gosh. Wow. I forgot about that. Yeah.
Yeah, I don't know if you remember that, but that was a time. Yeah, well, that was a time when you had a situation where China did a model and they did it super cheap. And they were like, and people were like, oh, wait, actually, all this massive investment into these models in the US is like, it's kind of a waste, we've just, the massive overinvestment, and that's going to nuke the big tech because the capex on these guys is insane. Google just announced last week, they increased it. They increased it in 1 quarter. They increased their guidance of that capex by 50%. So a quarter ago, Google was like, we're going to spend 120 billion in 2026. In 3 months' time, they're like, oh, actually, we're going to spend 180 billion. Like it's mind-blowing numbers, right? And it's insane capex spending. And it's just Google. That's not obviously you have maybe not the sort of like you have similar ballpark numbers coming from these other big tech situations. It's going to be close to $1 trillion spending this year, and then obviously projecting forward. And so you have massive investment. So it's like we're trying to walk this tight line where if AI is as good as they think it will be, software is going to get nuked. But if AI isn't as good, then it's like, all this capex spending was a waste, or big tech is going to get nuked, and the market, the broader stock market index, which by the way is 36% of, these big tech represents like more than a third of the industry, the S&P 500 industry, that's going to nuke. It's a really interesting fine line. It's like in order for everything to work, it's like AI has to be really good, but not too good, but not it's like and we're just kind of working our way through this. And I do think that mostly that it just creates it's not going to last this sort of period of I just don't know what the future holds, because we've been in this situation many times before, in the sense of when the internet was coming, it was going to be a big change, but people didn't really know what that meant. Obviously COVID, which is the reference point for this article, look, to put things in better perspective, think about us as human beings. I mean, we're talking about a new technology that's probably going to create massive abundance, but you can only go back 100 years or 80 years, and it's 90 years. It's actually a new world war is breaking out, and that creates massive uncertainty. So human beings have dealt with massive uncertainty always. It's this sort of the almost a defining characteristic of what it means to be a human being is there's shifts around you that you cannot control, and the future is unpredictable, and you're trying to save for the future, but it's difficult because stuff that you can't control is affecting your world. And hey, I do think we got to be grateful and appreciative that I'd much rather live in a world where the stuff we're talking about is AI and amazing super intelligence is coming, than that, as opposed to the next world war and nukes are going off is coming, because that's a different conversation that people have had in the past, and that's also bad for investing supposedly, but actually it's bad for everything, whereas this is this will work out. I'm really confident about this, and we've talked about this a lot over time, where this idea of being optimistic as a person. I mean, I really believe it's incumbent to be optimistic, not because it's just good to be positive, but actually because it's, which it is, but more importantly, it's logical, it's rational. Think about where we are. If things didn't have a way of working itself out, we wouldn't be in this time where you and I are having this chat from the opposite sides of the world, and meeting each other through the internet, and all this massive abundance, all this cool stuff that's happens in the world. We are, this does have a way of sort of figuring itself out. And I do think, I'm like extremely optimistic about how the kind of like super intelligence is going to come in, and it's going to change everything, but then it's going to be like better even though it's different, it's just going to be better. But also equally, you have to be like, well, that's why Bitcoin price is down or whatever. Like right. have to try and hold these kind of multiple things in your head at the same time. That's life, right?
I mean, absolutely. Well, 100% agreed on like, that's what it means to be human. It's like, we go through struggles, we deal with struggles, we try and come on the other side. One thing that did come to mind while you were speaking is like, there already is a pretty intense wealth gap. And it's hard to know like how much of it has always been there, like how much of it has changed, 100 years ago to now kind of thing. Maybe it's more in your face because of social media. There's more data that we can talk about, more research, things like that. But especially from that article, there are going to be increasingly more jobs that AI is able to do better, longer hours, 24/7, no emotions, no breakup that happened at home, and now affecting 30% of your output. You're less effective, and you're like, man, like you really got to hustle here. Like you got to get ahead now. You got to make investment decisions now. Like you really got to lock in these next few years. That was like the other thing that kind of got to my mind. Cause like, yes, I'm also optimistic, but I'm also, I'm eternally optimistic with the caveat of like, I think there's gonna be a pretty intense barrier here of like, if you don't lock in now, if you wait too long kind of thing, and you don't get on like the other side of the hump, it could be increasingly more difficult to make an impact and to get paid and to like, make money and things like that.
Yeah. And this is why it's so important to basically be constantly learning, right? Like, the interesting thing about AI is that nobody is an expert in using these tools. Like they're 2 years old. Like it's a great opportunity for anyone because it is a total greenfield. Like nobody is an expert. Nobody is that far ahead of you. Like nobody is that far ahead of you. If you want to be someone, well, first of all, if you want to be employable in a future world, you just need to increase your skills, because if you can offer skills to people, they'll pay you for it. If you can provide useful services, but then it's like, what skills should I learn and this kind of stuff, and it's uncertain. But the point is that you want to be focusing on a number of different areas, and arguably what you want to be doing is, I believe, is trying to build up. It's this idea of a skill stack, which is, it's not so much that you want to be the top 1% of one specific thing. It's that you want to be really good at like 20 different things, right? Because that's when, I mean, like take say for you, Kate, in the way your career is progressing, the way you're able to do what you do is because you have knowledge about macroeconomics and finance, but also because you're comfortable with social media and with streaming, and then you also know about crypto, and you also know about making videos and video editing and all this kind of, like, you suddenly, it's like, across one dimension you might not be the top 1%, but suddenly when you combine these like 10 different slightly tangential skills, suddenly it's like, well, actually there's not that many, suddenly it gets a lot harder to be the Venn diagram of who can do what you do becomes a lot smaller, right? Because yeah, there might be someone that can do that one thing that you can do, but if you can do 10 different things, it's like, well, actually, I don't, it's hard to find somebody that can do that exact thing, and that's your skill stack. And that's what everybody needs to do, particularly in this environment with AI, where you're going to be learning these 20 different skills because you just don't know which ones are going to be replaced by AI. Like, you don't want to be going all in on video making, in my opinion, as an example, because it might be that AI is just like, you could just tell a prompt, hey, make me a video, and it just goes beep, and you've got like some amazing video. And then it's like that skill that you kind of worked on isn't that good. On the other hand, it's still a good skill to have, but you just want to have 20 other skills that you can combine with it, so you're diversified. And it's the same, I guess. The diversification is kind of an interesting one, because people also use this same idea when it comes to investing, but I think it's a little bit different, because when it comes to your own personal personal strategy about a career and jobs and this sort of thing, they can be stacking on top of each other. When you have like an investment portfolio and then you invest in 50 different things, inherently it means you're not concentrated in any one thing, which means you're going to like reduce your risk, but equally, when one thing shoots the lights out, you've got 40 other things that don't. Whereas when it comes to your own personal development, everything can be additive to itself until you've got this kind of, you can build a career. And I do believe that like AI is, like becoming good with AI is going to be one of the things that is probably going to be necessary for every successful person's skill stack.
Well, dude, Michael Saylor came out with all his financial instruments. You literally a weekend with ChatGPT or whatever AI he used.
Yeah, exactly. Right. And like, that's like, and also, but equally, don't you think there's an amazing lesson there where it's like, this guy is, what is he, late 50s, 60, whatever. He's minted. He's worth many, many billions of dollars. And he's still going to be like, hey, I need to learn everything I can about AI and use AI. Like, it's that learning mindset, right? So I think that's what's interesting. And obviously as well, like, when we're talking about, we're on this investment podcast, right? Investing, talking about macro ideas, talking about crypto, like you have to be learning. If you're not learning, you're going to get, and you're just going to get, you're going to miss it basically. Like, it's a challenge to be like, you're testing your ideas against the market is what you're doing. So if you've got a fixed mindset, you're pretty much stuffed.
Yeah, you're cooked. Absolutely. And I liked what you said. It was a little bit earlier, but when you mentioned like with the Bitcoiners, and I've had this conversation with a few other Bitcoiners in the last month or so as well. We had Gary Cardone on the podcast and a few others. Yeah, they beat to a different drum. Like they're like, look, especially Gary. I mean, brother's made it. He's made it great. He's killing it in his industries, and he's just converted to Bitcoin. He sees a value prop there, but he doesn't see eye to eye with a lot of the Bitcoin. She's not scared to put his opinion out there. He's like, look, and Greg Cardone, same thing, is his twin brother. They both were like, look, we came in here, we liked the asset. There's a good like argument for what it was compared to other assets. I was interested in investing. I come to these spaces and people are talking about Bitcoin changing the world. It's going to end this. It's going to start that. It's going to do all this stuff. And he was like, dude, like, is it going to do all those things? And then we see it pinned against the market, and it's just trading like any other stock for a period of time. It was like there's a period where it kind of was running with gold a little bit, and people were like, oh my God, it's going to be the gold. I thought it even might do that. And now here we are. It's down 50% or something like that from the highs. Stocks are looking not too bad. Precious metals had a crazy run. They're cooling off a little bit. Maybe we'll see what happens there. But like you said, it's the idea of whatever it is pinned against the market. Like it is raw truth when it's pinned against the market, and we get to see how people are pricing it in, and whether or not people believe or buy it. Whether or not the value prop of Bitcoin is there. Is like a different conversation. Like me and Robert talked about this, Robert Infra, of like, the Bitcoin value prop versus what people are willing to say is the Bitcoin value prop. And that's kind of dictated with the price action. And if it's not up, it's like $1 million. Like it kind of shows you like what percentage of people are buying it, buying the idea of it, and then, putting their money behind it. So
it's a story. It's a story and narrative about whether people are willing to, like that's what fundamentally changes the rate of adoption. There are some like mathematical properties of something like Bitcoin, which, like the math is There's only 21 million units. And when you have, say, a growing money supply, when the number of dollars in existence is essentially over a long enough time period, and I'm talking about the next 100 years going to infinity, and the number of Bitcoin is remaining at 21 million, that creates this pull for it to be a deflationary currency that just rises in an instant when it's denominated in dollars. So there's mathematical properties to it. But equally, the day-to-day, week-to-week, month-to-month, year-to-year price actions, like how much is a narrative catching? It's like, is it digital gold? Is it going to be the future of money? This is is quantum a risk? These are stories that we tell each other because nobody knows, right? Nobody knows the actual answer. So it's a question of like, are you believing the narrative? And that's true with pretty much all investing, right? Tesla is a $1.4 trillion stock. It's trading like 300 PE. Like there's no value, there's no way to justify it on any sense of its financial metrics. You couldn't possibly justify it based on any kind of cash flow model. But you can tell a story about it. You can tell a story about the way the world is going with respect to robotics and AI and the combination of the two things, and how this company is positioned to be the leading robotics manufacturer over the next, because post the AI revolution, if you think the next big thing is going to be robots in the 2030s, who's going to be positioned to take it over? You can tell a story that it will be Tesla. Will it be Tesla? Who knows? Nobody knows. Not even Elon knows. Like, it's just a total random guess. But you can tell a story. You can tell a narrative about it, and that's the thing that Bitcoin has as well, which is equally, it has its negatives, because when people stop believing in the story, you get these you can get downward price action, but equally, it doesn't go away. Like something like Bitcoin, it can't die because it's just this decentralized network. As long as there's people, as long as there's some believers, the flame is alive. And so the story can recapture again. I mean, we've seen this with gold, right? Like, yeah, gold's been on this amazing run, but after 2010, it had like a decade where it was down 50%. Like over, I'm not talking about grinding down. Like, yeah, Bitcoin's down 50% over a few months, but it's better to go down 50% over a few months than to go down 50% over a decade. Like, imagine holding your wealth in something that just grinds down for 10 years. Like, that's pain. Bitcoin can go down, but Bitcoin might be at all-time highs by the end of the year. Like, that's just volatility. It's different than actual like long-term grinding pain. And the point is that even the gold guys were eventually right, because the story came back, and actually people like uncertainty about AI, uncertainty about dollar, uncertainty about quantum. Hey, what about this shiny rock? Maybe this is the thing. And suddenly people talk about, well, yeah, this has been the savings for thousands of years. And it's like, well, sure, that's true. But hey, people weren't singing that song 7 years ago, and it was also true then too. Nobody cared. So, that narratives come and go.
That's a really good point. It was like that with when Bitcoin was like really at all-time highs. It was like 110, I think, at still at the time. I don't remember if we had already tested, or I don't know if we had already gone to the 126 mark or not. But we were up over six figures, I remember. And at that point in the narrative formation, it was like, Bitcoin is going to track with gold. We were starting to see Bitcoin ETFs that were paired with gold together. And I was like, dude, this is huge. And I had to go through a couple of those like cycles of seeing the narrative form after price moved to be like, okay, I see how this kind of works. I see how these narratives form. And it's hard to fault anyone, because like, unless you're like, unless you are following up to date with like price action on a day-to-day basis with like a lot of technical analysis people, or you're just paying really, really close attention, you'll find yourself getting kind of pushed around by the narrative, and just like whatever the thing is hot, you're kind of just rolling with that. But after a few months of being like pushed around like you're in the ocean or something, you start to be like, wait a minute, like they said this 2 months ago, but now it's this week. And like 6 months ago, we're talking about this. And I thought this was supposed to fall apart. And like last year, they said the same thing. Like at some point, these things start to come together. And so I'm not sure. Like there was a point where I really thought like Bitcoin and gold were going to track together, and they were just going to rise to Valhalla. And then gold just sort of sent, and Bitcoin just didn't. And then now I don't really hear much of anything related to Bitcoin and gold, like almost at all.
Yeah, no, you're so right, and I will absolutely say I was right there with you, man.
Yeah.
I really thought, I really have been surprised to the extent to which the adoption of gold versus Bitcoin. And of course, we go back, don't have to go back all that far. Like, you had President Trump talking about a strategic Bitcoin reserve. You had all of this kind of stuff, and it really looked like we were on the precipice of a Bitcoin being accepted by these financial institutions. You had one of the Nordic central banks was looking at adopting Bitcoin. This is about a year ago. None of this stuff happened, but it really looked like nation state adoption was just on the precipice of happening with Bitcoin. And for whatever reason, it didn't happen. And then you had massive buying for gold. So it was like these nation states looked at it, thought about it, and were like, nah. And that doesn't mean that it won't happen in the future. It's just that it didn't happen in this moment. And yeah, I mean, it's extremely interesting when you think about something that's potentially world changing, because at least it has that world changing narrative. Nothing like the best narrative in the world is the world's money, right? Like that's because that's instantly interesting to every human being on the planet, right? Because you can't, even if you want to pretend you don't care about money,
Yeah.
You ultimately, you still use it every single day of your life. So you can't fundamentally every human being in the world is faced with caring about what is money, like what is the money. And then if you can spin a good narrative around it with some actual genuinely compelling actual fundamentals, which Bitcoin does have, when it's fully it's the hardest money compared to everything else. It'd be a fixed supply. Nothing else has that kind of characteristic. And so it's easy to understand why people at one point thought it was going to be the world's money, and still do. But it doesn't necessarily mean it's going to happen on that. Well, it's not going to happen in 2025.
Yeah, unfortunately.
Didn't happen. And so it's like, well, what does it mean going forward? I'm not sure. And then this takes us back full circle. It's like, well, what is it? If it's not the world's money, what it looks like when you just look at the basic sort of hard, what is it? How does the market treat it? Which is like just a total objective analysis. It's like, oh, actually, it looks like it trades like a software stock index. And that correlation might break down, but that's what we see at the moment. So that's really interesting. But I also think, Bitcoin has this property where it can be I think it's Luke Groman that likes to say it's a bit of a fire alarm for the total system, right? Like it's, there's a lot of information embedded in the price action of Bitcoin. It's just a question of unpacking and unweaving and be like, what do we actually, like when the price is moving, that's telling you something about the real world.
Yeah.
It's just trying to figure out what it's actually telling you about the macro economy. But I do think that's interesting.
No, I like that a lot. I think it's Robert who also brings up Luke a good bit. It might be somebody else. Someone in our spaces for sure also brings him up a decent bit. Maybe it's actually, it's possible that it's you. I'm not sure. I forget who brings it up, but it's a good point. Like, for me, it's tested. Whether or not. For me, I mean, especially for me, I'm sure a lot of Bitcoiners, new and old, are like tested with like, okay, is this what I think about Bitcoin? Like, was this the truth about Bitcoin, or was this a narrative that was pushed? Like, do these properties of Bitcoin, are these actually accurate versus like, was this a narrative that I kind of just got on the tail end of kind of thing? And I imagine it's probably the same. I said this before. I imagine it's probably the same with a lot of people who got into the precious metals. They're holding silver. It's the worst trade of all time for like 30 years. And then boom, now they've got their 20x or whatever. And then they're like, oh my God, like I knew it, dude. Silver has always been this thing. And I've always thought, it'll be like that for Bitcoin. I've never really been in the camp that it must send this year. Like we were in the Bitcoin spaces, and like I remember when people were saying we'd highly likely test high 200K Bitcoin this year. And I was just like, dude, like that's cool. I feel like it's probably not the one season I found out about Bitcoin that everyone's going to be like, you know what, dude, let's send Bitcoin at $250. I was just like, I don't know it. And I feel like I'm being like outcast because I won't get on board with that. But I was like, just because I now have found that, and I'm like, hey, I think Bitcoin's a great asset to invest in. People found that to be gold 30 years ago, and they had to wait for a long time. Same with silver, a long time. It doesn't change any of the factors about Bitcoin or gold. It talks about is like what you just said is like until the market's decided that this is truly what it is, and then you're going to pit it up against the market, and then you're going to say, okay, like is the supply demand factor really there? And that's why people are looking at copper, and they're like, maybe copper is going to be the one that really takes off because of the supply and demand. And so I've always been like, look, if Bitcoin is what it says it is, there will be a time where we send, and it might be really fast, it might take forever. But like, I don't necessarily need to be in the camp of like, hey, if this doesn't go to 200K, you're not part of the club kind of thing, you know? And I feel like that's probably how it was in other asset classes too.
Yeah, well, look, you always want to be wary of group investing, group think, right? Like it's a very dangerous position to be in. So I got to respect you being a little bit skeptical.
I tried to.
Yeah. But no, I mean, I think that we're at an extremely interesting point in time right now because it's going to be like this can all flip so quickly if it reverses. It's going to be like, oh, we're actually like the bull market is back on. This was just a bear market fake out. And on the other hand, if it goes the other way, it's like we're back to a kind of a Bitcoin is dead situation, which Bitcoin has seen many, many times. I mean, it's 2022, Bitcoin's dead. Certainly 2018, Bitcoin was dead. 2014, 2015, 2012, like it had this, Bitcoin was like, oh, the hype cycles. So either way, I it probably doesn't change too much about the long-term trajectory. Like it's going to be more fundamentals, I think, that affect Bitcoin, whether it's like whether quantum risk affects it or not, or whether there's actual, what happens to monetary policy in the United States and whether the sort of the fiscal situation. I think these things are going to affect it longer term when you talk about like 5 years out from now. But it's also like can be exciting too because it could potentially create opportunity either way in some sense, right?
I mean, for me, it's just an opportunity to stack. Like, and plus, like if you're nervous, for example, about the U.S. dollar and some U.S. stocks, now people are like, hey, one of the companies we work with has some ETF opportunities overseas and like Asia stocks and things like that. And I was like, dude, like that's cool. Like Bitcoin can be like an alternative asset you choose, like especially if you're not fully bought in, you're not like a Bitcoiner in quotes kind of thing. And you're like, no, I like Bitcoin. It's one of the 4 assets I think will probably do well over time. I think every 5-10 years, more people will find out about it and say, yeah, this thing's falling apart over here. I'll stick 1% of my portfolio in here or 10% of my portfolio. I mean, we had Ray Dalio doing like a whole media tour the last couple of years talking about the New World Order. Like you got to be diversifying into gold, even Bitcoin, if you're in that category, like maybe these have something to do with it. He's quieted down a little bit about Bitcoin because the price action, I think. But he's like, hey, like you should think about this. Like you should diversify your portfolio differently than we've diversified it in the last 50 years kind of thing. And I think that conversation will continue to evolve. And I think Bitcoin will just be one of those assets. I think it'll perform like on a long-term time frame. I feel pretty comfortable with Bitcoin. And so I'm like, for me, like selfishly, like it's like against Wolf Bitcoin because like obviously the Bitcoiners want Bitcoin to go up as fast as possible. I don't have enough, so I'm like, I would not be mad about a long consolidation period. So we have guys on our space who are like, hey, we might see a 5-10 year capital rotation into a bull market for metals and commodities way more than stocks. We've never seen Bitcoin in that kind of environment. You might have 5-10 years of being outperformed by other assets. Bitcoin might not be that big catapult 25x every single year. Are you still interested in Bitcoin if that doesn't happen? And that's where we'll find out like who really likes Bitcoin,
Yeah, well, arguably it's already happened. I mean, you look at the last 5 years,
true.
like
That's
gold's outperformed Bitcoin over the last 5 years.
Great point.
So, and so is Nasdaq. So you could argue, I mean, yeah, they might be right, but you could argue like, hey, we've had that 5 years.
True.
Well, yeah, I mean, it's look, it's an uncertain world, but it's an interesting setup.
Yeah, absolutely. Dude, well, listen, I think it's been an excellent conversation. I feel like we've gone kind of all over the board, from AI to the stock world, and ETFs a little bit. We're Bitcoin. Talk about all the things. Is there anything else in your mind? Any last things, like any data you're waiting for end of week, or things you're looking forward to going into next week, or anything that's on your mind?
Look, I mean, I think we covered a lot. I do think that it'll be really interesting. It's not coming next week, but certainly in the next couple of months, when we find out for sure who's taking over the Fed. It looks like a big wash, but it's not guaranteed. That's probably the most. And then it's like trying to figure out what are the logical conclusions that come from that? What are the repercussions?
Well, people have said that the market's kind of in this weird spot because they're trying to figure out what they think about Warsh probably being the new Fed chair. So we're going to have another moment once we find out who it is. Then it's like, okay, now we know, but what do we think? It's going to be another replacement. So
I do think that's interesting. Yeah, I mean that's probably one of the things that I'm watching. But look, there's going to be so many stories. I'm really enjoying doing these kind of weekly spots with you because there's so many interesting stories that pop up, constantly. So yeah, it's great to follow.
Yeah, man, absolutely. And for people who enjoyed the discussion, if you did, please do take a second, give Thomas a follow. He's tagged right above our faces. He does a lot of great content, tracking a lot of the Bitcoin ETF inflows and outflows, Bitcoin related stuff. Give him a follow for sure. And definitely check out if you're interested in that Rex Shares ETF we mentioned earlier. That link is in the description if you're watching on YouTube on ETF Tracker. And if you're on X, it's in the tweet right below the stream. So definitely check that out. Big shout out to Rex Shares for sponsoring the show. Repost the stream if you enjoyed it. We'll be back on stream next week. And we'll see what's going on in the markets. And we'll see you guys all in the next one.